Good morning and welcome to What I'm Watching This Week for the first week of March 2017. I am Bobby Cherry. You can find the written version of What I'm Watching This Week online at dreadheads.net and also at drcwealthmanagement.com. So let's get into it for the first week of March. What we learned last week from Janet Yellen's testimony to Congress is that a rate hike at the March 14th and 15th meeting is definitely on the agenda. The markets here, the S&P, the Dow, and the NASDAQ have all basically confirmed that they've all showed postings of 6% or greater for the year, and investors continue to bid up those prices, anticipating some sort of fiscal activity from the Trump administration as the year progresses. On the commodity side, corn, soybeans, and wheats have all showed some growth. Last week there was a little bit of a mixed market, but they closed the week higher. Internationally, meanwhile, also the trading in Europe and Asia finished the week lower, but like the U.S. market, they've all shown some significant gains for the year. Chairman Yellen did cite during her testimony that the closeness of full employment and the target market of 2% inflation showing are basically guiding the rate hike plans going forward. Stocks from that conversation did, in fact, as I mentioned, trade up slightly, and futures tied to rate hike expectations didn't really move very much, which is actually kind of surprising. The yield on the 2-year Treasury notes did, in fact, increase 0.19 percentage points for the week, and that was the largest weekly jump in 2 years, which kind of makes me raise my eyebrows and just kind of wonder. Basically, the contrarian in me says that the fundamental analysis of this current market and the price action that we're seeing in commodities and equities are slightly detached from reality. The valuations, as I see them, are a little bit stretched, and some caution should definitely be on the agenda going forward as we finish out the quarter. Also last week, Mr. Trump spoke to a joint session of Congress, and he laid out a couple of visions, and he pledged to do a number of things. Overhaul the immigration system, improve jobs and wages for Americans. He promised massive tax cuts for middle-class Americans and tax cuts for companies. What he didn't offer, and as I anticipated, he didn't offer any clues on how this is going to be achieved and or paid for. Some will argue that Trump's pro-growth agenda will invigorate the outlook for the economy and economic earnings. While that's possible, however, that argument is kind of speculative because it ignores the headwinds that he's going to face along the way towards implementation, specifically from members of his own party and obviously the Democrats. Going back to the Fed, the extensiveness and the consistency of the Fed statements throughout 2016 and into this year suggest a deliberate effort to shift markets in line with what policymakers are seeing as a new reality. There is, in fact, stronger worldwide growth in all economies. We're seeing steady U.S. growth. The possibility of fiscal and tax plans that may edge inflation and growth even higher are for real with the Trump administration. However, the stock market rally, the current rally, it's been a phenomenal quarter. Let's just put it that way. And investors should remain a little bit cautious because there are some bearish attributes, some bearish sentiment that's just over the horizon. So there's the possibility of a sellback or a pullback or however you want to term it on the horizon. We've got the political risk in Europe still hanging over us with the election coming in France. This month in March, we're looking at some more Brexit woes as Theresa May lays out her agenda for the Article 50 invocation out in Europe. Also hearing some rumors out of both Scotland and Ireland wanting to remain in the EU. And again, we have our ongoing uncertainties here with the Trump agenda. All these and more could trigger a wave of risk aversion. So being cautious isn't going to hurt you. Yeah, you'll leave some money on the table, but at this point in time, until we get some further clarity from President Trump on his economic agenda and we see some more stability and some more growth out of Europe, caution is the word of the day. So that's where we're at for this week. I hope you enjoyed your weekend. I look forward to seeing you next week for our next installment. Happy trading and have a wonderful week.